Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is August 20th, 2025. I am Luna.
I am JPMorgan.
Stocks were sending, well, really mixed signals. You had the S&P 500 slip about 0.6% and the NASDAQ down 1.5%. That was largely tech, think NVIDIA and other AI-related names.
Right. And what's interesting there, you mentioned intervention worries.
Exactly. It wasn't just profit-taking. There seemed to be this growing concern about potential government intervention in tech heating up. That definitely weighed things down.
And yet, the Dow Jones held up surprisingly well, right? Basically flat, up just 0.1%. Supported by retail earnings, I gather.
That's right. So you see this divergence. It really points to a cautious sentiment being the main theme. Investors are, clearly waiting.
Waiting for Powell at Jackson Hole?
Absolutely. Everyone's keenly awaiting that speech. And that kept risk appetite kind of capped. Long-term bond yields still elevated. The 10-year Treasury was hovering near 4.3%.
And oil. I heard that was a bit wild.
It really whipsawed. Dipped first on those, fleeting Ukraine peace hopes, but then rebounded. WTI crude settled near $62 a barrel when, no actual deal came through. Shows how headline-sensitive things are.
Okay, let's shift gears a bit. Some interesting economic data points came out. U.S. housing starts for July. They jumped.
Yeah, they really did. Up 5.2%, hitting 1.428 million units annualized. Stronger than expected, driven mostly by multifamily construction.
But, and this is the catch, permits fell to a 5-year low. What does that tell us?
Right. That permit drop is crucial. It's a leading indicator suggesting developers might be getting a bit wary about future demand or maybe construction costs. Signals a potential slowdown later, despite the current surge.
Okay. And over in Canada, inflation news.
Yeah, Canada's CPI eased to 1.7% year over year in July, mostly cheaper gasoline doing that. But the core inflation numbers, they stayed pretty sticky, around 3%.
So that sparked talk of rate cuts.
Immediately, yeah. Talk of a possible Bank of Canada rate cut started up, which weakened the Canadian dollar. The market's asking, is this easing temporary or something more?
Meanwhile, in Asia, Malaysia's exports look pretty strong.
Surprisingly strong. July exports surged 6.8% year over year, beating expectations. Electronics and palm oil helped. That's a good sign, not just for Malaysia, but it boosted sentiment for Asian stocks generally. Maybe global demand is holding up better.
And down in Australia, consumer sentiment got a lift.
It did. Rose 5.7% in August to 98.5. That came right after the Reserve Bank of Australia cut rates. So you see that direct link policy easing, boosting confidence, lifting local retail and bank stocks.
Okay, now for the big macro stuff. This political pressure on the Fed seems intense. President Trump's call for, 300 basis points in cuts?
Yeah, full 3 percentage points.
Yeah.
He reiterated that demand quite loudly, and that really ignited these fiscal dominance fears.
Fiscal dominance, explain that a bit. Why does that push up yields?
Well, fiscal dominance is the worry that the central bank, the Fed in this case, might be pressured into keeping rates artificially low to help the government finance its debt, rather than focusing purely on inflation and employment. Markets worry this undermines the Fed's independence and could lead to higher inflation down the road. So investors demand more compensation for that risk, pushing long-term yields higher.
Makes sense.
Yeah.
And there's talk about Fed leadership changes, too.
Right. Adding to the uncertainty, there are reports positioning Stephen Miran, a Trump economic advisor known for favoring deeper cuts, for a vacant Fed board seat. If appointed, you could potentially see, an unprecedented block of 3 dissenters pushing for cuts. That adds a whole new layer of unpredictability.
Wow. Okay. And then Evercore comes out with a pretty stark warning, too.
Yeah. Evercore ISI predicted a 7 to 15% drop in stocks by October if Powell disappoints the market's rate cut expectations at Jackson Hole. That definitely put some caution into the market. Some selling in tech was noted after that.
Geopolitics also playing a role with Ukraine?
Definitely created some sharp short-term moves. Trump's talks initially hit European defense stocks hard, some down 8%, and oil dipped too. But then reality set in no concrete deal, and both defense stocks and oil paired those moves pretty quickly. Just shows that headline volatility.
And finally, this potential government stake in chipmakers receiving CHIPS Act money. That sounds significant.
It really is. The idea that the Commerce Department might explore taking non-voting equity stakes, maybe up to 10%, in companies like Intel, Micron, TSMC's U.S. units, that's rattled the tech sector.
Rattled how? Fears of interference?
Exactly. Fears of government interference, maybe profit dilution. It raises this big question about, how involved the government gets in key industries and what that means for investment and risk going forward.
Okay, looking ahead. What should we be watching for in the next 24 hours? It's Thursday, August 21st.
It's a packed day for U.S. data. You've got initial jobless claims, the Philly Fed Manufacturing Index, and then the S&P Global Flash PMIs, both manufacturing and services, plus existing home sales.
And Treasury auctions.
Yes, a 17-week T-bill, a 30-year TPS reopening, that's the inflation-protected bonds, and a 20-year bond auction. But the main event really kicks off in the evening.
Jackson Hole begins.
That's right. The symposium starts at 8:00 p.m. Eastern Time. Powell's big speech isn't until Friday, but, keep an eye out for any early signals or headlines trickling out Thursday night. Could definitely move markets.
So wrapping this up, what's the takeaway for you, the listener? We're clearly seeing markets trying to navigate a lot right now. Central bank uncertainty, these intense political dynamics, some surprising economic data points, and sharp reactions to headlines.
Absolutely. And maybe here's a thought to leave you with. Really consider how these moves towards direct government stakes in strategic industries, combined with this escalating political pressure on central banks like the Fed, how that might fundamentally change the landscape for investment, for risk, for quite some time to come. That's a big shift potentially underway.
You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day, earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters. Money.ai, know what moves your money.